market continued its all-time highs march higher on Thursday's trading session. Even though it was a half day of trading with the holiday shortened week, the S&P 500 closed up 0.83% at 6279.35. We've been tracking this 50-period moving average on the 15-minute chart for the last couple of weeks. We've been in a really nice uptrend, and you can see just how well this 50-period moving average has been respected. And this is often the case during significant uptrends or downtrends in the market. On a shorter term time frame, you can use this 50-period moving average quite effectively. So we combine that, of course, with gamma exposure as well as option volume data. And as you see on our chart, the gamma exposure concentrated at 6280, which is right up where we ended the trading session on Thursday, basically shows a lot of gamma exposure expiring for the week and for the day, just around 1.5 billion in gamma exposure that actually expired on Thursday's trading session. Taking a look at the volume that traded in the options market, the biggest volume was at the 6,300 strike. So clearly, even though Thursday was a relatively low volume trading session, the majority of market participants in SPX options believe that price still has a chance for further upside, at least another potential 20 points up into that 6,300 strike. But if we just zoom out a little bit and take a look at the other strikes in the SPX options chain, we can see the skews actually shifted slightly downwards in terms of Thursday's trading volume. There was actually more volume between 6,000 and 6,200. So potentially market participants are preparing for a move lower, either hedging their portfolios or outright speculators coming in and betting for a drop lower, perhaps another gap up early next week that results in a sell-off in the 3 to 5% range. That's something that we've been talking about for the last week as a potential possibility. And so we've been moving our hedges higher in terms of our portfolio protection in order to capture some gains if the market does retrace in that 3 to 5% zone. Switching over to the SPY, we're seeing very similar setups in terms of the gamma exposure and the volume data. In the SPY options market, more volume was coming in to the downside, discounting the at the money volume that traded during Thursday's trading session. So it is possible that we are seeing the early signs of potential exhaustion in the market, at least on a near-term basis. Switching over to the Qs, we're seeing a very similar picture. The skew in the options market volume is slightly more to the downside than to the upside. So this doesn't necessarily guarantee that we're going to have a big crash or anything, but what it does is just show you that market participants, at least on a speculative basis, are of the mindset that the market has moved up pretty fast and are expecting at least a slight pullback. So that's something we're going to be looking for heading into this next week. If you've been watching our videos for the past month or so, we've been highlighting the resistance level at the 6150 strike that obviously has broken out to the upside in a big momentum burst over the course of the last week to week and a half. And this was all preceded by gamma exposure building at higher strikes, really all the way up to the 6600 strike over the course of the last several weeks. So this is something that we've been highlighting in our videos over the past month, that gamma exposure is positively skewed and continues building to the upside. So now, given this breakout, it's possible to see some sort of retracement anywhere down here. You can see currently this is our zero gamma exposure level right at the 6100 strike. And so this possibility for a retracement into 6100, I think, makes for a really decent support if we get that kind of pullback. There's no guarantees that we could get that pullback. Interestingly enough, that would meet the 50-day EMA potentially over the next several days. I think that would be a gift for a lot of market participants who missed out on the previous momentum breakout over the last couple of weeks. And that could be another potential low risk, high reward type of setup if we get that scenario. Next, let's take a look at a few of the names that we are actively trading. We'll start off with Amazon. Amazon had a nice up day on Thursday, up 1.59%, closing at 223.41. We've been monitoring the positive gamma exposure between 220 and the 230 strike. And over the last week to 2 weeks, we have made a strong move up into that gamma exposure concentration. During Thursday's trading session, we were actually able to lock in $5,250 profit on our short Amazon puts. We initially entered the July 18th 220 puts, and you can see this trade was initiated back on June 18th. And so we were giving ourselves about a month for a move up. At the time, Amazon was trading at 215.13, and you can see the setup here, large GEX growing at higher strikes all the way up, really up to the 230 strike, and big volume coming in from 215 on upwards. And so this appeared to be not only a consolidation zone with the possibility of a breakout, but we also saw data in the options market, both from volume and gamma exposure, suggesting this possibility was very likely. So again, we close out the position on Thursday, locking in over $5,000 profits. Going forward, I still think Amazon has more room to run. And given what we're currently seeing in the gamma exposure data, as well as the options volume data, I think the potential for a move through 230 still looks likely up into the next couple of weeks. Next, let's take a look at Palantir. Palantir up 1.7% on Thursday, closing at 134.36. Palantir has retraced from just under the 150 strike to all the way down to the 130 strike just in a matter of days. It looks like a little blip on the chart, but obviously a significant move coming just above the 50-day EMA sitting at 125.48. The gamma exposure data is showing GEX concentrated from 135 all the way up to 150, and volume is also strong between the 135 and the 150 strike. So this suggests to me that market participants believe a bounce is coming back up into those previous levels, because we're seeing a combination of gamma exposure and continued volume in that price range between those levels. So this is a position that we currently have on in two of our portfolios. We have out of the money call debit spreads, giving ourselves a couple of weeks to take advantage of a potential bounce higher from here. I would say this is a little bit more of a speculative trade because we're trying to essentially capture the bottom here, looking for a bounce after this fairly steep sell-off from the 150 level. So still in the speculative phase, but there is room in our portfolio for more speculative trades. I would definitely include this in that category. But just zooming out, you can see the trend for Palantir continues to be to the upside. We continue to maintain this upward momentum despite the sell-off over the last week. And so I think until that breaks, the momentum will continue to the upside, and that's something we're going to be watching very closely this next week. Next, let's take a look at Shopify, up 1.52% during Thursday's trading session, closing at 116.52. This is a name we're actively trading with call debit spreads. We're in the money currently on our existing position. There is some resistance coming up here at this dealer cluster zone at the 120 strike. That's the largest gamma exposure concentration. The skew looks higher in terms of open interest and gamma exposure. The trend has been higher since early April. So I think if market momentum continues, this is a name that could see significant upside if there's a breakout above this 120 strike. So obviously this is going to be something that we're monitoring very closely as our position is in the money. However, I do think the probabilities for a little bit of continuation, at least up into that 120 strike, are rising. And so that's what we're going to be watching for as well this coming week as we trade. And you can take advantage of our limited time promotion, $300 off our yearly portfolio manager tier subscription. Use code SUMMER2025 at checkout. We've got a few spots available, but it does end soon, so take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you also get access to the premium channels in our community Discord. You can track our trades in real time and share ideas and strategies with all the great traders in our community. I'll put links in the description below for all of that so you guys can check that out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.